Bitcoin just crashed to $75,000, wiping out $800 billion in market value and triggering $2.5 billion in liquidations in a single day. Nearly 200,000 traders got their accounts blown out. This is the biggest crypto crash since the FTX collapse. But here's what nobody's telling you. Three separate forces collided at the exact same time to create this perfect storm. Let me break down exactly what happened, why it happened, and what comes next. On Saturday, Bitcoin plunged through the $80,000 floor to just above $75,000. Ethereum dropped 10%, Solana fell 7%. The Fear and Greed Index hit 14, extreme fear territory. Bitcoin fell out of the global top 10 assets by market cap, now trailing Tesla and Saudi Aramco. But what made this crash so brutal wasn't just the price drop, it was the liquidation cascade. Over 850 million in long positions evaporated in hours, eventually snowballing to 2.5 billion. When leveraged traders hit their liquidation price, exchanges force sell their positions. That selling pushes prices lower, which triggers more liquidations. A domino effect that turns a dip into a bloodbath. Three forces hit the market simultaneously. First, geopolitical shock. Reports of a potential US-Iran military escalation sent risk appetite into a deep freeze. Bitcoin wasn't treated as a safe haven, it was treated as the world's ATM, sold off by panicking traders who needed cash, and it happened on a weekend when market liquidity is paper-thin. Second, the hard money reset. Gold crashed 9% in a single session, dropping to $4,900. Silver suffered a historic 26% crash. Why? The nomination of Kevin Warsh as the next Fed chair sent the dollar surging. A strong dollar makes dollar-priced assets more expensive for international buyers, triggering massive de-risking across all hard assets, including crypto. Third, structural fragility. Market liquidity never recovered from the October 10th crash that many blame on Binance. The market was already bruised, running on thin liquidity, and this triple threat was enough to break it. So is this the bottom? Here's what the data tells us. Bitcoin is down 40% from its October peak of $126,000. The Fear Index at 14 suggests maximum pessimism, which historically has been a contrarian buy signal. Gold and silver are already bouncing. The key level to watch is 75,000. If Bitcoin holds above that, we could see a relief rally. If it breaks below, the next major support is around 68 to 70,000. For the short term, watch the Warsh confirmation hearings and any Iran escalation. These are the two macro catalysts that will determine direction. My take: extreme fear often marks opportunity, but don't try to catch a falling knife with leverage. The 200,000 traders who got liquidated this weekend learned that lesson the hard way. If this breakdown helped you understand what just happened in crypto, smash that subscribe button. I'm covering every major market move with data-driven analysis. No hype, no hopium, just intelligence. Hit the bell so you don't miss the next one. Stay smart, stay solvent.